Global markets rattle as dollar confidence shakes.
BRICS rebuke Trump, but the debt crisis won't wait.
$37 trillion debt flashpoint. Gold surges. Doubts grow.
Washington under pressure. Is the dollar's era ending?
The Kremlin says there's no war on the dollar, but the markets are screaming otherwise. BRICS is buying gold by the ton. US debt has hit $37 trillion, and Washington's printing press is the only thing keeping the system breathing. This isn't a rumor anymore. It's a countdown. Because when the world stops believing in the dollar, every American paycheck becomes a question mark. Let's start with the headlines everyone saw. Trump claiming BRICS wants to kill the dollar, the Kremlin pushing back, calling it nonsense. Sounds like politics. But underneath the noise, something quieter and far more dangerous is happening. Money, the world's trust in it, is shifting. In 2025, America's public debt didn't just break records, it shattered belief. $37 trillion. That's $111,000 for every man, woman, and child in the country. And every 30 seconds, it climbs by another $1 million. Investors see the numbers and ask a simple question. If the world's richest nation can't slow its borrowing, what backs its currency except hope? Hope is not collateral. The Reuters story focused on diplomacy, Russia denying any attack on the dollar. Fair. But watch what they do, not what they say. China and India have been settling oil in their own currencies. Brazil is testing cross-border payment systems that bypass SWIFT. Russia is stockpiling gold reserves, now the 5th largest in the world. Together, the BRICS bloc holds roughly 1/4 of global GDP and nearly 40% of commodity trade. That means every bar of gold they buy is a vote of no confidence in the dollar.
They're not launching a war, they're building an exit. Asian Times called $5,000 gold logic, not lunacy. Why? Because when currencies lose trust, metals gain religion. Central banks bought more gold in the last 2 years than in any period since records began. They know that paper can burn, but gold never confesses. Each ounce becomes a silent vote against Washington's promises. Meanwhile, the U.S. Treasury is paying over $1.2 trillion a year just in interest on its debt, more than it spends on defense. Every bond auction is a stress test for faith in America, and that faith is thinning. For decades, the dollar's power wasn't just economic, it was psychological. It was the world's safe place. Wars could erupt, markets could crash, governments could fall, but the dollar would still buy bread. Now, that assumption is cracking. Sanctions weaponized the currency. When Washington froze Russian reserves in 2022, other countries saw a warning. Their money was only safe if they stayed in line. That moment planted the first real seed of de-dollarization. The GCSP paper put it plainly, the shift isn't about hatred of America, it's about survival. Nations want insurance against a system they no longer control. Here's the paradox few want to say aloud. The US built global dominance through its currency, and now that same currency is its weakest link. As interest payments soar, the Federal Reserve faces a trap: raise rates and risk recession, or print more money and risk collapse of faith. Either choice bleeds credibility.
Land when it does. Crises don't begin with panic, they begin with fatigue. Investors see another budget standoff, another debt ceiling fight, another temporary fix. They start hedging, then they start leaving. Confidence is the most liquid asset in the world, until it isn't. And that's what makes this moment so dangerous. Because for the first time in half a century, America is not just borrowing money, it's borrowing belief. Belief that its currency will always be the anchor of the world. But anchors only hold until the chain snaps. Every new BRICS trade deal without dollars is a tick. Every US bond auction with fewer buyers is a talk. Each one brings the world closer to the moment when the dollar is no longer the default choice, just another option. And when that happens, the shock won't be felt in Moscow or Beijing. It will be felt in Main Street America, in prices, mortgages, and retirements built on the promise that the dollar was forever. That promise is running out of time. The most dangerous economic shift doesn't start with an explosion. It starts with a quiet no. A trader says no to US bonds. A central bank says no to storing its reserves in dollars. A partner nation says no to pricing oil in Washington's currency. And one by one, those small no's build into something unstoppable. Because trust, once it begins to leak, doesn't come back. The Kremlin insists BRICS isn't targeting the dollar, and technically they're right. The group isn't waging war, it's building alternatives. Payment systems, clearing banks, regional trade networks, small at first, but growing fast. Saudi Arabia just settled a major oil sale to China in yuan. India paid for Russian crude in rupees. South Africa joined new digital currency pilot projects, linking it to the Gulf. None of these transactions make headlines, but together they rewrite the rules of global trade one invoice at a time. It's not rebellion, it's replacement. And Washington can't sanction its way out of it. When Asia Times called $5,000 gold logic, not lunacy, they were pointing at something deeper. Gold is not about profit anymore. It's about trust insurance. In a world where paper assets depend on political stability, gold answers to no flag. That's why central banks from Poland to Singapore are hoarding it, quietly preparing for a future where trust must be tangible again. For Americans, that should ring an alarm bell, because gold isn't just rising, it's replacing confidence that once belonged to the dollar itself. When the world trades faith for metal, the game has already changed. Now let's look at the real heart of this crisis, America's own machinery. A $37 trillion national debt sounds abstract, but it's not. It means Washington spends more paying interest than building schools, roads, or defense systems. It means the Treasury borrows today to repay what it borrowed yesterday.
The system survives on belief that tomorrow will always come. But what if lenders begin to doubt it? Japan, once America's biggest creditor, is reducing holdings. China has cut U.S. bond exposure to its lowest level in decades. If the world stops lending, the only buyer left is the Federal Reserve, and that means more money printing. Printing solves the math, but it kills the faith, and faith is what made the dollar powerful in the first place. Yes, the dollar still dominates global reserves, nearly 58% of them. Yes, U.S. markets are deep, liquid, and stable, for now. But power built on inertia is the most fragile kind. The U.S. once mocked other nations' inflation. Now, inflation has become its own export. Every extra dollar printed weakens not just savings, but global credibility. Allies see it, adversaries see it, even domestic investors see it, shifting money into commodities, real assets, and foreign currencies for the first time in a generation. The empire isn't collapsing, it's eroding, not with noise, but with fatigue. While politicians debate de-dollarization, the average American feels it differently, through life, not headlines. Groceries cost more because the dollar buys less on import markets. Mortgages stay high because the government needs higher rates to attract lenders. Retirement funds wobble when bond yields spike. Most people think the dollar's fall would show up on Wall Street screens. It won't. It will show up in rent checks, grocery aisles, and the shrinking gap between paycheck and survival. When a currency's credibility fades, it doesn't crash overnight. It evaporates, one painful month at a time.
As the West debates policy, BRICS members are creating new supply routes, new finance rules, and new psychological maps of power. A world trading bloc that doesn't depend on Washington's approval is no longer theory, it's architecture. The Global South sees this as liberation. Western analysts see it as fragmentation. Either way, it's irreversible. Because once a country learns it can trade without the dollar, it never forgets. That's the quiet revolution no one in Washington wants to talk about. Not because they don't see it, but because they can't stop it. For decades, US policymakers comforted themselves with one illusion, that the dollar is too big to fail, that it's the bloodstream of the world. And yes, it still is, but even the strongest heart can stop if the arteries clog. Debt, political polarization, declining trust, they're not separate problems. They're symptoms of the same disease, overconfidence. The BRICS alliance didn't create that. They just stopped pretending it wasn't terminal. Every major power in history believed its money was eternal. The British pound once ruled the world. Then came empire fatigue, debt, and overreach, the same trilogy haunting America now. The dollar won't disappear next month or next year, but its supremacy is no longer unquestioned. That's the first step toward the end. And here's the part no one dares to admit. When the dollar weakens, the US can't just reprint trust. Trust has to be earned, and Washington has been spending it recklessly for decades.
Imagine a bond auction where buyers demand double the yield. Imagine a supermarket where imported goods cost 40% more. Imagine a savings account losing value faster than it earns interest. That's not a collapse, that's a slow, grinding adjustment to lost faith. And once faith breaks, it doesn't rebuild through speeches or sanctions. It rebuilds through pain, through years of austerity, inflation, and revaluation. That's the real price of ignoring the warnings. The Kremlin says there's no war on the dollar. Maybe they're right, because wars are fought between enemies. This one is being lost by neglect. Every debt ceiling raised, every deficit ignored, every policy built on short-term comfort, they all point to the same truth. The threat to the dollar isn't BRICS, it's America's refusal to take its own warning seriously. When gold hits $5,000, it won't be a surprise, it'll be a confession that the world stopped believing before Washington stopped spending. And when the dust settles, one question will echo louder than the debt itself. Was this a foreign attack, or did America quietly devalue its own promise? Because in the end, currencies don't die of enemies. They die of disbelief. And right now, disbelief is spreading faster than any war.